If you are losing money in forex trading after making out your key zone, this might be the reason why you are losing money. Understanding how this work and how this work is actually important in forex. Most people feel like once we mark out our key zone, that's all. Understanding market structure is one thing. Knowing where to take your trade is another thing. On an uptrend, we have this higher low, higher high, higher low, higher high, higher low, higher high, higher low. For example, you'll see some people marking out those zones as their key zones. You see most people marking out these zones as their key zones. It's one thing to actually mark this zone as your key zone on higher time frame, and it's another thing to know if those zones are valid to enter, because the market can just decide to give you something like this, decide to push down, change trend, and continue selling. So in this video, I'll break down the key factors you need to look before marking out that zone as a key zone, and what you expect to see there before you enter that market to continue that buy to the upside. For us to know that, okay, fine, the market will continue to push to the upside. Because if you clearly see this is a key zone, we expected the market to break this resistance. If we're on an uptrend, we expect the market to keep breaking to the higher zones, take out this zone, take out this zone, while respecting the support. While respecting this support, if you should flip this particular trend to the downside, you clearly see that it's the same thing here. While this lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. For us to continue this trend, there are certain things we need to see around those key zones for us to know that, okay, fine, the market is still selling. So in this video, I will break down everything we need to know. Once you understand this concept, this and this, you are 85% ahead of a lot of traders. So let's break down this. For every key zone we marked out, we're expected to see a reversal pattern depending on where that direction is going. For example, let me use this uptrend for example now, this particular uptrend. If we're getting an uptrend, we expect to sell the market, you say to buy. You sell to buy, then you sell again, you sell down here, let's take this out. You sell down here to buy. You can clearly see it. We'll have a buy opportunity, which is the trend we're actually on, then we sell, tap key zones, we buy, we sell, we buy, come back to that key zone to buy again. So for us to continue buying, there are certain things we need to see in the market after marking out those zones, which is the key zones. Once we get the key zone, once we mark our key zone, what we're expecting to see for this particular uptrend, we expect the market to start giving us something like this, a downtrend to that zone, a downtrend. Then let's say, for example, we mark out our key zone. Once the market gets to our key zone, we're expecting to see a reversal pattern at that zone, which is a rejection. We can see a failure swing, then MSS. Once we get that MSS, we know that, okay, fine, the buyers are back to into the trade. We mark out that zone as our MSS. What we expect to see is a pullback, which is an inducement, a pullback. If the pullback should mitigate the breaker block that caused the MSS, automatically we cannot use that zone to buy the market. We'll have to wait to use the other block. Let's say we have this push. Before that push to the upside, we're expecting to buy the market from this zone below, which is the other block, to take out the high of that trend, which is this particular zone here. I'll explain again. Let me use this zone. Let's say, for example, we are on an uptrend, then we want to sell to buy. Let's say we start having a downtrend like this. Getting to our key zone, we have a failure swing like this, our MSS. Let me mark here as our key zone. You don't have to worry, I'll still use a chart to explain this particular trade. We'll have something like this. In the process of us having this market structure shift, which is our MSS, we expect a pullback, which is our inducement, to come back. If the inducement should mitigate the breaker block, here is our breaker block, we'll mark it as our breaker, and we'll mark it as our order block. If the market should come back to the breaker block to mitigate that zone before pushing up to clear out that candle that caused the MSS, automatically this breaker block is no longer valid for that buy. Let's say we have something like this. We still expect the market to come back to the order block to push, to take out the high, to give us, to continue that structure to the upside. Okay, so let's use this one. Let's say now we'll mark it as our key zone. Then we'll have something like this. Let me explain again. Lower high, lower high, lower low, 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 then our MSS. We'll have a pullback. You can clearly see that the pullback did not mitigate this breaker. Then we'll have that push to the upside, taking out the candle that caused the MSS. We can now use the breaker block to buy, knowing fully well that the pullback did not mitigate the breaker block. But you notice this first one, the market actually mitigated the breaker. That was why we used the other block below to buy. But in a situation whereby the MSS is here, and we clearly have an inducement that did not mitigate the breaker, which is this zone, we can still use the breaker block to buy. But I'll see a lot of people, let's say this is our daily time frame, for example. Our daily time frame, we'll have this. You just see some people marking out that zone. You just see some people marking out this zone, and they'll just set their trade. You'll see them, they'll just long from here. Let me take this out. You see some people, they'll just enter the trade from here, take profits here. And what's happening? You see some people doing this. Yes. You see some people entering the trade like this. I'm not saying they are wrong, but for me, I would rather wait for the market to come back to that zone. I will go down to the lower time frame to see something like this, a downtrend. Once I get to that zone, I'll wait for a failure swing or liquidity sweep, anyone you want to call it, then a reversal pattern, an inducement, take out that candle that caused the reversal, then come back before buying. Then in this situation, you clearly see that if you have to wait for that confirmation, your entry might be here. Let's say we are using the order block. Your take profits is here, 1:6. You can clearly see it. But if you are using the daily without confirmation, putting it here, stop loss is here, is 1:3. You can clearly see it. But I highly recommend you to wait for this confirmation on the lower time frame. For the daily time frame, I always advise my students to use either the 1 hour, 45 minutes, or 30 minutes for the daily time frame key zone. But if you are marking your key zone from the 4 hours, I advise them to use either the 30 minutes or the 15 minutes. Then if your key zone is from 2 hours, you will use either the 15 or the 5 minutes. So I've shown you guys the bullish scenario if to buy. Let me explain if you want to sell. So let's say in a situation whereby we have higher high, higher low, 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 higher high, then an MSS. Yeah, push, take out the candle that caused the MSS, breaker block, then we can sell. Marking here as our key zone. Marking here as our key zone. So this is our MSS. If you clearly see that the inducement did not mitigate that breaker block that caused the MSS, that was the reason I'm selling from that zone. But in a situation whereby we have here as our key zone, and we'll have this push to the upside, higher high, higher low, 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 sweep of liquidity. Then we have this as our MSS pullback. Once that pullback mitigates this breaker block, sweep this zone, we are expecting to sell from the other block, from this zone. Let me use a different color for that. We're expecting to sell from the other block because the breaker has been mitigated. The inducement mitigated the breaker block. So selling from that zone is pointless. We'll mark this here. So expect the market to come back to this zone. Tap here before selling to take out this low, this particular low. Remember, this is the lower time frame. If you should go to the higher time frame, you'll clearly see that we have something like this. These are the zones we are targeting to clear this. No, sorry, not this. The higher time frame, we are targeting the resistance if we are buying to take out that zone like this. Take it out. So for the sell, we are targeting this. Let's say this is the key zone now. Once the market gets to that zone, we are targeting the overall low, which is this zone. This is our key zone for the sell here. So overall, we are targeting that. So let's go to the chart now. Let's mark out all these things we've learned. So what's BTC actually doing right now? Okay, for this particular trade now, we can clearly see, let me go down to the zone. Let me zoom in. When we started buying the zone on BTC, let's mark out where is this market reacting off. Let's take this out. Let me use this. Okay. You can clearly see that we had this other block on the daily time frame here. We had this other block for this buy on BTC. After marking out that zone, where are we targeting? This high, right? This is the high we targeted. But personally, I will not be targeting that high. The reason being that I was expecting sell from this zone because BTC was bullish overall. So to be on a safer side, I will target this internal liquidity overall, initially, we can clearly see that BTC is bearish, but that will be on another video when I will be explaining directional bias. You can clearly see what BTC has been doing. Tap, sell, tap, come up, sell, tap, come up, sell, tap, come up, sell. Before this push, sell, sold before. Currently now, BTC is pushing up. I'm still trying to understand the reason for this push. But that aside, that's not why I'm explaining this particular trade. So after marking out that zone, let's say for example now, if you want to enter this trade, you take here, your stop loss should be here, your take profits will be here, 1:3. You can clearly see it, 1:3. Let's go down to the lower time frame. Being that this zone, we marked it from the daily, so first of all, go to the 1 hour. On the 1 hour, what do we have at that zone? You can clearly see what we had at that zone. We had there as our market structure shift, which is our MSS. But this particular trade, when I took this trade, I didn't use the 1 hour because it was noisy at this point. So it was the 45 minute I used. We'll go down to the 45 minutes. Let's see what's happening at that zone. Should be clearer on the 45 minutes. Yeah, there's it. So let's take this out. On the 45 minutes after the MSS, this was the other block. This was the other block. You can clearly see the pullback, which is our inducement, mitigated the breaker block, which is this pullback here. The reason I will not be using, let me zoom in. Another mistake most people do is marking out the wrong inducement. Personally, I will not be using this bullish candle here. This bearish candle, sorry. I will not be using this. I will not be using this particular one as my inducement. The reason being that candle failed to break above the candle that caused the MSS. This was the candle that caused the MSS here. If you see after that push to the downside, this was what we had down. Then we had this push to the upside, came down. After this, we had this push to the upside, pullback, which is our inducement. Remember, I said that push has to take out the candle that caused that MSS. This was the candle that caused the MSS before the push, before we had that buy to the upside. You can clearly see it. So marking out this candle, this bearish candle now is wrong. You cannot use this as your inducement because why? The candle failed to break above the MSS candle. So automatically these are inducements. This. But on that thing you should look is this one actually came down to mitigate our breaker block, making this our breaker block invalid. Despite the fact that this is not our inducement, but the fact that the candle came down to mitigate it, we cannot use this particular zone. So this is the zone now we'll be using our other block, the body of the candle. Then I advise traders to actually target this low, this particular low. Give your chart breathing space. That low, this is our protected low overall, this particular one. So you target the closest. Then our entry should be from here, our stop loss will be here. Then remember our take profit, what are we targeting? That high, 1:21. You can clearly see it. Using the daily time frame, we had 1:3, but waiting for confirmation, 1:21. You can clearly see it. After that, what did BTC do? Came back there, gave us the market structure shift, tapped, started buying to the upside before hitting foot CP. You can clearly see it. Going back to that same chart, let's go down to 4 hours. Going down to 4 hours, we can still see continuation entry on this particular trade. For this particular trade, we can still see continuation entry when we had this break of structure here. When we had this break of structure, market came back to this order block here. When market came back to this order block, what are we going to look for? Same reversal. Since we are using the 4 hours, we'll go down to 30 minutes. We'll go down to 30 minutes. On 30 minutes, what do we have here? We don't really have much for this particular zone, but this was the last candle before that push. So we'll go to 15 minutes. Let's see what will happen at that zone. On 15 minutes, what do we have? What do we have on 15 minutes? Okay, it's clearer here. We actually had a type B setup at this zone on the 15 minutes. The inducement came before the MSS. Yeah, this was the inducement. This is a type B setup. I will not be going deep into that one. Then the market came back to this order block, right? Let's see. Yes, that was what the market did. Came back to the order block, give us another market reversal pattern, knowing fully where the market is bullish, gave us another MSS at this zone, market structure shift, MSS. After that, the market used the breaker block, which is this particular zone, the last bearish candle before that push. That's for our bullish order block. A bullish order block is the last bearish candle before the push. This is the last bearish candle before moving up. If we should go to 4 hours, we can see that this zone, this place here, we'll still see another key zone around this zone on 4 hours, around this zone for the market to actually give us that reversal. This particular zone here should be a key zone on 4 hours. Let's check it out. Let's go down to 4 hours. Okay, so it's not really that clear. So it's a weak candle on 4 hours. Let's check 2 hours. On 2 hours, still not clear. On 3 hours, still a weak candle. Okay, we got here as a key zone. Let's see on the 4 hours. Okay, that's a key zone. Let's see what happened at that zone. Okay, we had this market structure shift. Yeah. Let's mark here. Let's see what happened when market came back to that zone. I think market should come back to that zone to react. Market failed to come back to that zone. Hopefully, if we should get another sell on BTC, so is what market did. Market might still come back to that. So let's go for the buy and the sell on BTC. Let's go to daily. Let's use that. I'm actually backtesting for this particular trade, but I prefer people for testing. You can actually just mark out zones and wait to see how the market reacts off those zones. You can forward test. Okay, what did the market do? Let me take this particular trade. Let's see. I don't want this video to be long, but I don't have any option. We add this breakout structure to the upside. So automatically this is a key zone. This zone is a key zone. This breaker block. Using that breaker block, okay, market came back to that zone for this sell to the downside. So what are we going to do? Let's go down to 1 hour. Let's see what happened at that zone. For us to sell that market, wait. Regarding the confirmation I was telling everybody to use, our target is to take out this low. This low is our target. Selling the market at that zone, if we are to take the sell from here, stop loss should be slightly above 1:3. Using confirmation entry for this particular trade. Okay. You can clearly see that we had this push to the upside. Higher high, higher low, 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 higher high, before this market structure shift. This was where we had the MSS. Yeah. This zone was the MSS. Maybe? Yes. We had a low at that zone now. Yes. Let's take it out. This is our MSS. So going down to 45 minutes, let's see what we have at that zone on 45 minutes. Should be clearer. Okay, yeah. So mark here, we had double candle inducements. These are inducements. That's a valid pullback. Since the breaker block is mitigated, this was the breaker. We cannot use that. We are left with the other block, which is this. For the bearish other block, the last bullish candle before that push to the downside, there's the last bullish candle. You can clearly see it. Our entry should be here. Take profits. No, there's the, was that the low we are targeting? I'm coming. We have too many drawings here. Which low are we targeting? Okay. Let's take this out. Let's take this out as well. This is the low. This is the low we are targeting here. One is to 17. You can clearly see it. So that aside, initially that was last week. Yeah, last week, Abi. Yeah, that was last week. There was one zone I marked out for BTC. This was the zone. This was the zone I actually marked out on BTC. Yeah. I had the intention of selling BTC with the zone. This particular zone, which I clearly posted on my Telegram channel, telling people that I'll use it as my inducement. I expected the market to give me this push before selling. But when the market came to that zone, there was no MSS, and the market mitigated that other block, which is the key zone. Sorry, the breaker block, which was my key zone. Let's go down to the lower time frame. You'll clearly see that there was no confirmation at that zone. And someone came to my DM and was telling me that I hit stop loss on BTC. Did I send you to jump into this trade? See, there was no liquidity sweep. There's no MSS. There's no point entering this trade. Wait for confirmation. Most of you will be like, hey, you want to jump in because I gave out that call. Me giving out this call I did not tell you to jump into it. You can clearly see it here. There was no confirmation, no reversal pattern. But for the fact that the market actually gave us this push, mitigated that zone, bought above that zone, even if I should get an MSS at this zone, I will still not take this trade because market might just decide to come here, tap. What's happening? Sorry for that. Market will just decide to, market will just decide to come here, give sweep, even if the market should sweep above this zone, that zone has been mitigated automatically. Give us an MSS tap. The market can decide because we have multiple break of structure at this zone. Multiple. And the market decided to use the other block here to buy. You can clearly see it. The reason why the market did not respect those double break of structure is because there was no inducement. If the market actually gave us an inducement like this, let's say there was another push that actually broke above this candle that caused those double break of structure, I would have taken the buy from here, from this first one closest to inducement. Yeah. But the fact that the market did not give us an inducement, the market had to come down to this zone to buy from using the other block. You can clearly see it to the upside. A lot of people, after learning, they will still jump. That was why I said, if you are marking your key zone on the higher time frame, wait for confirmation. You see some people, you will jump, enter here, stop loss. Because I see I'm using other block, then you want to take out this zone. Personally, this was where I wanted to even take profit. Yeah, because I was expecting the market to bounce off this zone initially. But some people will just run. Even if you are taking it 1:5, Abi, let's just put this 1:5. It's still a nice trade, but wait for confirmation. Most people will not wait for confirmation. A lot of people will not wait. I actually sent out this trade for people that cared to actually take the trade. Yeah. Let's go down to the lower time frame. You see that we had an MSS at that zone. We had reversal at that zone, which the market sold. You can clearly see it. We had this push, lower low, lower high, 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 which caused the MSS. This is our MSS here. Then our inducement push. The market came back to buy. You can clearly see what the market did. Okay. This was a single candle inducement. Sorry, that was where the market. This one, the market used the breaker block to buy. Yeah, breaker. Reason being that this was the inducement, single candle inducement, did not mitigate the breaker block. The market actually used the breaker block to buy our stop loss. If you remember when I started the video, this was where I put my stop loss. Let's align it so exactly. Your entry should be here. Going down to how we marked our key zone, 4 hours. Where are we targeting to take out? Where are we targeting to take out? This was the zone I was targeting to take out initially because I took that as liquidity. Back to 30 minutes. One is to 11. So I don't understand why most people will just see a zone, they will just mark it out without confirmation. They will just jump into that trade. No, this was it. Stop loss was here. 1:7, not 11. You can clearly see it. Selling from this zone is useless. There was no reversal pattern at all. So those people that actually sold from here because I called this zone, I'm sorry, but you guys should have waited for reversal, which I clearly stated. Wait for reversal. I will see some people sending me the trade. I did not trade. I did not catch this particular buy. There's no point lying to anybody. The market did not give me any reason to buy from here. I was actually waiting for reversal, but I had to leave the market after seeing the market failed to give me a reversal at that point. This whole buy, some people will tell you that they caught the buy. Me, I don't know how they actually caught the buy because going down to 4 hours, there was no buy pattern for me. This was my initial plan. My initial plan was this. I was expecting the market to actually use this zone to come down to this zone before pushing up. Before pushing up. Before pushing up. If you should watch my other video, my initial plan was to take out this high. This was the high I wanted to take out. I wanted to take out this high, but market did not come back to the zone I wanted to use. I started buying. I did not catch any of the trade. This was the trade I showed you. This was the ones I caught with this and this sell. So for those of you jumping into trade without confirmation, I don't know, probably you have to go back to your drawing board and decide what you want to do. And I'll be hosting a class next month. For those of you that are interested, you can hit me up where I break down key factors, things to mark out, how to take a proper inducement, things to look out for, continuation entry, how to mark out your key zones and everything. I'll be teaching it in that class. If you're interested, you can chat me up or you can join my Telegram channel to chat me.